So guys, welcome to our new video, and today we're going to discuss demand and supply. I know demand and supply is a famous concept in the forex market, but today I want to break down into what demand and supply is in the forex market and how you can identify demand and supply on the chart. Watch until the end. Alright guys, welcome to this session. I'm going to take you through how to identify supply and demand on the chart. So I think, supply and demand, as I said, is the most accurate method of forecasting the future prices and taking trades in the market, okay? So ideally, the background of demand and supply. So if, for example, today, the bank is going to increase the interest rate. So increasing the interest rate, it means that it is going to discourage cash flow in the economy. And that is when now you start seeing high demand of that particular currency. Okay, so if, for example, today there is an economic catalyst that will favor the supply of a particular currency in the market, you'll see more supply of that particular currency, and the price will start decreasing. Okay, so this concept of demand and supply is the same concept that we use in any business. So today I'm going to explain how this demand and supply works from the introduction to the end. Okay, so now this supply and demand, the concept of supply and demand. So first of all, I'll give you the law of demand and supply. I'll give you the law of demand and supply in the forex market. And remember, all financial markets work on the universal law of demand and supply. Okay, so the higher the price of an item, the less the demand. Let's say, for example, in our screen here, we have gold. Okay, so in our screen, we have gold. So when you see the higher the price, when the price goes up, the less the demand. Okay, it means that, in other words, buyers don't want to buy at a higher price. And when the price goes low, the higher the demand. So it means that buyers all the time will want to buy at a low price. So that's why we say we buy low and sell high. So, and the law of supply will tell you that the higher the price of a particular instrument that you're trading, the higher the supply. So it means that at any time, sellers will not want to sell at a higher price. So, and the lower the price, the lower the supply. So sellers all the time will want to sell at a lower price. So now in the market, you realize that this concept of demand and supply will mark the border between buyers and sellers. Okay, so it means that the demand zone, that is when you see more buyers coming in, and at the supply zone, that is where you'll see sellers coming in. Okay, so that is the basic concept that we should understand, or that will help you to understand this concept of demand and supply. So let me give you an example. Okay, let me use GBP and USD. So I want to give an example on the pair that I do not have my analysis on it. Let me use this one here. So demand and supply. So now, for you to identify a perfect demand and supply, we have two concepts. That will help you identify the demand and supply. Remember, this is the most basic thing that you should understand when it comes to smart money, because it will give you the foundation of a smart money. So when I say smart money, it's actually nothing but the concept of how the institutions trades. Okay, remember, and shown like bank, we said bank contributes up to 80% of the total volume in the forex market. So it means that they have that ability to create a demand or a supply of a particular currency in the market. So now, when you identify supply and demand, let me give you a clear chart. Let me give you a clear chart. So you have two main concepts on how to identify demand and supply. So one of them, we have distribution. Okay, so distribution of orders. Number two, we have accumulation of orders. So distribution of orders and accumulation of orders. So these are two main smart money activity that will give you or will guide you on how to identify the zones of demand and supply. So let me start with the accumulation here. So now, in this particular this particular point here, so you realize that we had a downtrend. Okay, so we had a downtrend. The market was forming something like a descending channel. Then turn to a particular point where we had some exhaustion of orders. So you see, so we had some exhaustion of orders at this particular point. Okay, so this exhaustion of orders, sometimes a trade trader might wonder why is it that the market does not want to go either buy or sell. So this consolidation here is actually, it has its purpose. And eventually you see this consolidation leading to an uptrend. Okay, so ideally, the uptrend that we experience at this particular point, definitely it will tell you that there's a break of the previous pattern. So the pattern is now becoming irregular. Remember, we had a regular pattern here of a sell, but at this point, the pattern, the pattern is becoming irregular. Okay, so of itself, you'll notice that there is what we call change of character is about to happen. So now, this buy here, this movement here, will tell you that there's an accumulation at this particular point. So it means that accumulation is when the market is trying to create orders for buy or buy orders in the market. Okay, so this buy we had after the market has formed a buy after this as such a character, then definitely let me mark it as so these are accumulation. Okay, so this character that was formed at this particular point is accumulation. And remember, key point, this will be accumulation if there's a buy. Okay, this market could have done this and sell. So if it creates something like this and sell, then there will be no accumulation. So it means that this buy purposely means there's an accumulation at that particular point. Okay, so now, so after you've confirmed that there's an accumulation, then you're going to mark the entire zone as demand zone. Okay, so this is a demand zone now. So this will be our demand zone. Demand zone has been created. Okay, so demand zone has been created. So as a good trader, you'll come and mark the zone as demand zone. So remember, assume the market is around this particular point here. So assume this market is around this particular point. Then on the side, before we had a sell, and it was kind of an impulsive sell. So we had this character here. You see? So we had this character before the sell. So this character of itself will tell you that there's a distribution of orders. Distribution of order. Distribution of orders. Okay, so let me just write distribution. Depending about spelling mistake. Let me try and perfect it. Distribution. Distribution of orders created. Okay. So now, so in this distribution, the distribution of orders was confirmed by this cell. Okay. So this market could have created this character here and buy. So you could not say that there's a distribution at that particular point. So it is because of this cell. So this cell clearly shows a sell pressure. Okay. So this cell means there's a sell pressure, and this buy means that there will be a buy pressure from the accumulation. Okay. So it means that up this point, we have two main psychological zone that will give you a trade. So you have the distribution, which the entire zone will be named as supply. Okay, so this is now the supply zone. Supply. The entire zone will be named the supply zone. So you have the supply and you have the demand. So it depends. Going back on how you're going to place the trade based on this concept, okay, you have two main psychological zones. So you'll place sell limit at the supply zone and buy limit at the demand zone. So you have, I'll create another video. I'll do another video that will explain to you how you're going to take trades based on that concept. So now, in this case, after placing trades, sell limit at the supply zone and buy limit at the demand zone. So you may not tell which one is going to be activated. Okay, so don't attempt to take trades on these areas here. So the market will take you out as a liquidity. So now, eventually this market took order at the supply zone. Definitely, you're going to target the demand zone. Taking orders at the supply zone, you're targeting the demand zone. Then, so it means that when you're selling from this supply zone, all the orders that lies at the supply zone, remember distribution is a smart money way of creating sell orders. And now we are selling from the supply. So it means that all the orders that that the smart money created or put at this particular point means, it has been taken out. It has been taken out or it has been used by this sell. Okay, this aggressive sell here or impulsive sell that was created here means that the orders has been taken out. All right, so all the volume or all sell orders has been used already. So you're going to sell to the demand zone, and remember you are supposed to have a buy limit at the demand zone. Taking a buy limit at this particular point, it means that there's high possibility that the supply zone is going to be taken out. Reason? Because the orders, the sell orders that lie at the supply zone has already been used by the sell. So now we are taking a buy and we are approaching the supply that has been the supply zone that has been tested. So most of the time you realize that is when now this market will create what we call change of character. So the abbreviation of our change of character is like this. So you'll predict that now you're taking the order, the demand zone, and this market is going to take out the previous supply zone or the supply zone that has already been tested. So in this case, the market is going to create another trend. You see, so change of character means that the market is changing its character from downtrend to uptrend or vice versa. And you see, so this market later created a long-term buy opportunity. So now with this concept, with this basic concept, you can easily tell if the market is going to create a long-term, it's going to create a long-term opportunity or opportunity that you can hold for several days, or is this just a short-term hold for a few days or few hours? All right. But again, remember the supply zone, the demand or supply zone that are, let me call it reversal based. Reversal based type of demand or supply zone is always a risk-free trade. Okay, so like for example, this point here to a very good risk-free trade. Risk-free means this high possibility of this market holding at the demand zone and taking it out. So now we have many examples. Let me give you several examples before we end the video. So you see, so the market created an accumulation at this particular point. Okay, so the accumulation was created at the reaccumulation of orders. Okay, so you have an accumulation and you have reaccumulation of orders at this particular point. So this reaccumulation will create another demand zone. Another demand zone. That's why when you see the market forming such a move, don't chase, because it will do a pullback back to the psychological zone, then give you a good opportunity to buy or sell. So another example, let me give you multiple examples. So I'm using GBPUSD because so these are distribution of orders, you see. So it was confirmed by this sell. Very nice sell. So this is an impulsive sell. So definitely, as a good trader, you'll wait for this market to come come and give you sell opportunity at this particular point here. Supply. Supply zone. Distribution. The entire zone will be named as supply. So wait for the market to come to the supply zone, then sell. So I have many examples. So that is how you can identify supply and demand zone on the chart. So guys, thank you for watching this video. Make sure you've subscribed to my YouTube channel. Also, bro, your bell. Yes, click the notification bell so that every time I upload a new video, you can now be able to get the notification. As well, follow me on TikTok, Facebook, Instagram, and X for more educational content. See you in our next video. Bye.